All right. Hey, everyone. Welcome to The Thoughtful Entrepreneur. I'm your host, Jen Amos. And today I have with me Will Rhind, who is the founder and CEO of Granite Shares, which is an entrepreneurial ETF provider focused on providing investors with innovative, cutting-edge investment solutions. Will has built and managed businesses in the ETF market for almost his entire career and held positions at firms such as iShares, World Gold Council, and ETF Securities. Will is regularly featured in media outlets such as Fox, CNBC, Bloomberg, Wall Street Journal, and Barron's. Will, welcome to the show.
Thank you, Jen. Really nice to be on. Thank you.
Yeah, it's an absolute pleasure having you. I thought I'd ask, I always like to ask this question to everyone because 2020 is quite an interesting year. How have you adjusted to the new normal?
Yeah, it's a great question. Surprisingly well, I think. For me, the challenge, for the most part, has been working from home, like everybody. Mm-hmm. And it's not because we couldn't or didn't know really how to do that from a technological perspective. That's not the issue. It's just that from a cultural perspective, we are financial services business, and therefore, from a financial services perspective, culturally, we've always been in the office, and that's what we're used to. Mm-hmm. So, working from home was a bit of an adjustment for us, but we were lucky, obviously, that our business remained open through that time. So, despite the fact we're working from home, the business that we're in remained open. And so obviously that was a positive. And now, as you may tell from the background, we're actually back in the office. So we have sort of come full circle.
Yeah, absolutely. I'm curious what that transition was like to go back in the office, because I imagine that there are probably some people who maybe got too used to working from home.
Yeah, I think, in many ways, I think you've got to do whatever you can to feel some kind of sense of normalcy. Mm-hmm. And I think normalcy for us was more, getting back to a working in-office environment. Mm-hmm. And, working from home, certainly had its positives. And I think, like I said, from us, it was really, it was no different from the business. We didn't feel the difference. But I think getting back in the office has brought some sense of normalcy that we're kind of back to something we're more familiar with.
Yeah, I imagine it's probably, now that you put it that way, it's probably a sense of relief for some people who have been dying for a sense of normalcy again.
Yeah, I think that it's easier, on, some of us that, have been doing this for a long time and maybe have, families or other sort of commitments whereby working from home can be quite a nice change. But I think for the younger folks on the team, definitely it was something that I think they much more used to working with other people and sort of crave that office environment or return to that office environment.
Yeah, absolutely. Well, thank you for sharing a little bit about your new normal. And it sounds like it's a breath of fresh air to be back in the office. I want to get a little bit more let's dive into Granite Shares. Tell us a little bit about what it's about and who you work with.
Yeah, sure. So we are an ETF company. What ETF is, or the acronym stands for Exchange Traded Fund. So it's a type of investment fund. And it's an investment fund that you list on a stock exchange, and ordinary investors can buy and sell it just like an ordinary share, through their brokerage account. But it's become a really huge part of money management and the investment or asset management industry today. So it's now a $6 trillion industry globally. And really it's kind of the new technology in the fund space. Mm-hmm. So we as a money management firm, we just focus on this particular product because we feel like it's the best sort of overall solution for investors these days. Mm-hmm. And in terms of what we do at the company, we have 3 areas of expertise. We focus on diversification strategies. So those are the things that don't necessarily correlate with the stock market. So things like gold, for example. We have income strategies, so providing people with income or a high level of income. And then lastly, long-term capital growth. So a unique strategy that invests in the stock market for the potential for long-term capital growth.
Mm-hmm. Awesome. Yeah, thank you for breaking that down. Tell us a little bit more about the types of investors that work with you. Who are the ideal investors or the types of investors that are most attracted to working with Granite Shares?
Yeah, no, absolutely. So, from our perspective, what we really focus on are what we call institutional investors. Those are financial advisors, probably for the most part, or wealth managers. But we are producing exchange traded funds that they then use in their portfolios. But the beauty of exchange traded funds is, like I said, because they're listed on a stock exchange, they're accessible to everybody. So although we don't promote our ETFs to end investors directly, obviously for end investors, you can buy them through your brokerage account just as easily as buying shares of Apple or any other popular company. But yeah, we as a business, we focus on financial advisors and other sort of wealth managers, other intermediaries.
Okay, that's understandable. So it's almost like kind of doing B2B in a sense, like going through the advisors who are going to talk to the clientele. Awesome. Well, I appreciate you elaborating on that. So, Will, you've been in business for over 20 years. I think that's something worth talking about. How did you get in business to begin with?
So I think probably just like majority of people who start a career in finance, it's fairly standard, I guess, at some level, whereby where I'm probably, you can tell from my accent, but I'm from the UK, and there's a graduate, or there are graduate intake programs for the big investment firms, the big banks, on a yearly basis. And so when I graduated university or college, I applied for one of those schemes and was accepted to a Japanese investment bank called Nomura, still the largest Japanese investment bank today. So I just went on a graduate scheme, sort of first job, knew nothing about it. And really that's how it started. And I ended up going into asset management after that. And that's where I've remained the rest of my career, focusing on these exchange traded funds. But probably a very similar journey to what most people would do in terms of coming out of college, applying for that first job, and applying that first job to like a big bank or brokerage firm.
Oh, I see. And then you just kind of, so it sounds like it was really a progressive thing for you to end up being in business for yourself.
Yeah, exactly. Yeah. So, I mean, I started working at a big, asset manager. The company today is called BlackRock. That's how I learned the business, and then got more involved on the entrepreneurial side, kind of as I grew along, working for a startup, and then ultimately, starting my own business 4 years ago.
Yeah, no, I think that's really incredible. I'm curious to know, for people that may be interested in walking in your shoes and doing what you do today, and this is kind of me asking you about what would you say, to your former self, or what would you advise your former self getting into this industry, if you could do anything better, to be, I mean, obviously it seems like you're in a great place today, but if you could give your former self some advice, what would you give that person?
Well, I'd probably give myself advice, or the same advice I give to other people, which is typically don't wait. And, I think from my perspective, I think there's an argument to say I could have done what I'm doing earlier. But at the same time, the financial services industry is one of the most highly regulated industries on the planet. And so you have to develop a level of expertise and technical knowledge before you can start up your own firm, because you're a regulated entity and you have to abide by very strict regulations. And ultimately, we manage money for a living. That's a very serious undertaking. That's not something that is sort of taken lightly. So I think from that perspective, you have to have expertise, and it takes time to build up expertise. But at the same time, what I always say to everybody else is that just kind of get on with it, and there's no need to sort of keep waiting for some kind of level of mastery. That I think that once you have a decent grasp of what you're doing, it's acceptable to keep going.
Yeah, absolutely. I think there's that, I'm not sure if it was the name of the book, but a phrase called fail forward. Sometimes you just have to, you can get all your ducks in the row to the best of your ability, get all the credentials, get all the education, but ultimately you just have to dive in and do it, because the market will change. The market could change, even like as you dive in, you're like, oh, great, everything I learned is now obsolete.
Yeah, and I think that's also a really good point, which is that at the end of the day, learning about things only takes you so far. You have to actually do it yourself. And it's only when you're in real world situations, like when you're doing it for yourself, do you really learn. And a lot of times they are situations that you have to figure out yourself, and it doesn't really matter sort of what you've learned in the past, is that it's a new challenge, a new problem, and you have to figure it out.
Yeah, absolutely. Well, is there anything else that you want to share with our listeners about Granite Shares?
Yeah, I mean, I think we're very visible. We're obviously a new kind of investment firm, so to speak. So from a investing perspective, it's easy to find us. We're just at graniteshares.com. People can come to the website, have a look at what we do, and obviously plenty of articles and things online about the services we offer. So if anyone has any questions, then obviously come and find us.
Yeah, absolutely. I'm curious to know, because you have been in this industry for quite a long time, and you're still in it today, what would you say you are most proud of so far? And I mean, and like I said, for as long as you've been in this and continue to be in this industry.
Well, I think, the reason why I kind of got involved with exchange traded funds, and the reason why I'm still doing this, is I firmly believe that every investor should own a basket, which is what we call a collection, but a collection of exchange traded funds, and every investor should be invested in them. And the reason is very, very simple, Jen, is that just like supermarkets and other things in other industries, what the ETF has done for financial services is brought down the costs of investing massively. So before ETFs, people used to buy mutual funds. And probably a lot of people who are listening to this now own mutual funds. And mutual funds, think of them as like the old technology, typically a lot more expensive in terms of the fees that you pay, less transparent in terms of being able to see the underlying, and less liquid, meaning that you can't buy and sell them whenever you want. And so the ETF is really that new vehicle, that new technology that came into the asset management space and sort of really disrupted the old guard. And so I've kept doing it because really I wholeheartedly believe in the product. It's something that I believe that everybody should own. And the reasons are very simple, because it's very, very inexpensive. It's very liquid. You can buy and sell what you want, typically tax efficient, and very transparent. It's all the things that investing should be. And that's why you get a lot of people like myself that are very passionate about the product and passionate about telling the story, so that we get investors really excited about investing again and putting their savings, their money into products that are actually good for them.
Yeah, I imagine because my husband is also in financial services, that a lot of the work he does is educating on the new, as you say, the new technology, like the new solutions. And so I'm curious what maybe that mental block is for people who want to keep with the old guard, or keep with like the old, like the mutual funds, or what they consider as stable and safe.
I mean, it's probably a subject for another conversation entirely, because there are so many. I would just say this, that here's the positive. The positive is that the individual investor has never had access to as much information as they do today. In other words, the internet has really kind of democratized the availability of information, and good information for the most part. And so the level of awareness or understanding of what's out there, I think, has never been as good as it is today. And that's empowering for people, because people can look up, what are mutual fund fees, or mutual funds versus ETFs, or should I be buying individual stocks, or versus different types of investment strategies. And for the most part, you can get really good, thoughtful kind of answers and education on these particular ideas. And so from that perspective, a lot of it is inertia. People don't know, but it doesn't take long for people to figure it out. But this is something that is growing and growing every day, every month, every year. I mean, when I started, it was very nascent, and like I said, it's grown to trillions of dollars in size over time. And that's just because people have realized and figured out that if you pay more for an investment, that is, all things being equal, coming out of your return. And so if you want a better return, a higher return, one of the most impactful ways that you can do that is by paying less. And so you keep more of that money yourself. I mean, that's just common sense. And that's one of the reasons why, people embrace and love this product so much.
Yeah, and I can also tell just how passionate you are and why you've been in the industry for so long. I think just that desire to educate people on how to manage their money better, and even educate financial advisors on, better options for their clientele.
Yeah, absolutely. So important for people because the industry is changing and it has, maybe changes slower than we would like as insiders, but it is changing. I mean, gone are the days where financial advisors used to sell products to end clients purely because they got a fat commission out of it. And those days, I mean, there's still some of those around, but for the most part, those are going away. Things are much more transparent, putting the client's interest first, and that's all a good thing.
Absolutely. Well, before we go, and I feel like you have shared so much knowledge and advice and lessons already, even for our entrepreneurs. Do you have any final parting thoughts you'd like to share with our entrepreneurs and small business owners listening to The Thoughtful Entrepreneur?
Well, I think that one of the best pieces of advice that I can give is again, just get started. And I think this is something that, if you have an idea, if you have a vision, is something that you're passionate about, there's no reason to wait. And I think that it's just something that, when you're ready to do that. You should have conviction, but there's nothing really to be gained by waiting. I think if you feel strongly about something, the best action to take is the action that you take today.
Well said. Well, thank you so much for joining us today. It's been an absolute pleasure having you.
Thank you, Jen. Thank you so much for having me. It's been a pleasure.
Yes. And again, to our listeners, this is Will Rhind, the founder and CEO of Granite Shares. You can learn more about him and his company at graniteshares.com. Thanks so much for joining us, and we'll chat with you in the next episode. Tune in next time.